All right, stock market analysis and projections, important information. Please do read this slide. It tells you about our approach to analysis and the important aspect of trade ownership. No matter what we say, no matter what anybody says, you have to own your own trades. You have to decide when to get in and when you're going to get out and not wait for anybody to tell you. And I promise you that will go a long way in improving your overall results. Once again, a reminder, we're running our cycle analysis workshop special right now. You can read this slide, go back and watch the really great presentation that Matt did earlier in the show about this cycle analysis workshop. You know, save $400 right now, only $897. If you're a level 4 member, write to Matt and he's going to give you an extra $100 off, and only $797. And if you want to upgrade to level 4 so that you can get this special discount, then let Matt know that also. And also you will get the bonus of being able to attend my next Behind the Cycle Analysis Curtain, where I go over all 24 symbols, 48 to 50 charts on the futures, and teach what I'm doing all through that. So it's a phenomenal opportunity. So please do take advantage of that. Stock market multiple time frame analysis and projections, SPY, weekly, daily, and intraday with our proprietary indicators. And I'm going to start now, before I get into that, looking at our market condition monitor. So what has happened in here? So as the market moves down, on the MCM, our near term, which essentially is, you know, traders that are going to be holding for just a matter of days, swing traders, those type of people, those look like the have turned negative here today. So for the very not day traders but short-term swing traders, conditions have turned negative based on our algorithms that you see there. Now for the short term, in other words, if you're like a trader of a few weeks at the most, maybe out to 8 weeks, things have neutralized in here starting yesterday. So things were very bullish and now they're going neutral, as what's happening is that the shorter term, as we call it, the domino, begins to tip over the other longer term inputs to these algorithms. And you can see in here as the short term starts to turn negative right over here, and that tips this over to neutral. So that is telling us things are changing, but not really negative yet. The market is selling off hard here on Friday, but it's doing that while the longer term inputs are still bullish, as you can see here as I switch over to intermediate. And all of these are still bullish. And when we look at the charts, you'll be able to see on the weekly chart that they're still really in very good shape. This intermediate takes monthly, weekly, and daily inputs, puts that in there, and then throws out the conditions. The absolute, when we, of our things that we look at, the intermediate is the absolute dominant. The short term is the next dominant. The near term is next, as you can see, and then the intraday right over here, which only our level 4 members get to be able to look at that, and they can see the conditions. So the intraday, as you can see in here, were very bearish to very bearish, except for the Dow. So right now we're looking at a deteriorating situation that actually is not yet bearish, but showing us that there is some weakness in there. So when you use the XBI, some things will turn slowly when you look at the longer term. It's the shorter terms that are really going to give you the idea when these things are changing. So it's important that you look at the multiple time frames. This is in the trader mode, and you can also look at it in time frames mode, as you have right over here. And this is looking at the 2 hour. If I looked at the daily, you could see right over there what these conditions are right there. So we're going to look at the trader mode right there, and that is what I wanted to show you on the market condition monitor. Remember, level 3 and 4 members get this application. So now we're going to switch over. We'll leave the gold chart right over there, and we're going to go into the stock market. So Gary Panisse, another CBOE friend of mine, asked the question, is there an island reversal? And there absolutely is an island reversal that you can see right there. I'm just going to go back over here so that you can see where those cycles, how the cycles are formed. These daily cycles have been fantastic. Now, you know that I have been looking for a period of risk or a corrective period. The daily cycles have kept us from believing that was happening yet. And we have cautioned about that for people that are shorting the market, that the indicators have been positive, the cycle structures have been positive. It's no time to be getting short the market in any kind of a significant way. The smallest positions are fine, you know, if you're trading the market, but not in any kind of a significant way. And you can see here as we look at the corrective periods right here, this one was barely a downtick. As a matter of fact, it formed a rectangle. I teach about this in the cycle workshop, how these form right over here. That's because the upside pressure from the weekly was so strong that this downside pressure from the daily couldn't get this to come down very much. And it just forms a rectangle. It could be a pennant, it could be a triangle, could be lots of formations that, you know, flags that, you know, give you bullish formations. And when you get into the next cycle is when they move up. That's why these formations have a high probability of coming out of the pattern the same way they came in this case, the upside. So this was your corrective period, corrective period, corrective period. This was your island bottom right over here, an abandoned baby, as you can see, and that made that bottom. Now you have the island reversal right over here, that top right there, as people were just absolutely choking at the door to get in here. Make sure you don't miss that upside move. And now they're just absolutely bailing in here to get out. It leaves the island. What that means is that the pricing right over here is extreme, just as the pricing right over here was extreme on the downside. And this very likely is an important topping area right in here between the monthly fib extension right there and the daily 61.8 right there, daily 3138 right there. This was an important area and it did fail from there. Now what we have is the conditions of the slim ribbon still positive. Look down over here, the option bias indicator still positive. These things have to turn for us to get the indication that something very significant is happening in the stock market. When I look at stock market momentum on the daily chart, you can see that this is still green right in here and positive, and the slim ribbon is turning over. The slim ribbon PO on the bottom right over here is still green, and it very well could give you an upside tick here. If it starts to chop around on the bottom over here and it turns purple, you'll know that there's a negative effect going on from the longer term weekly chart that is not allowing it to get any kind of a significant rebound. That would be a warning. Here is your weekly, here's your intraday, I'm sorry, here, the 2-hour charts. And you can see the declining phase. This is your daily cycle that I have overlaid on this chart right over here. And you can see how it follows on this 2-hour right there. There was a little head and shoulders right there that gave you the measurement to come down to this area, which it easily did. And then you had this declining phase in the daily chart. And then you got into the rising phase on the daily chart. But here's that big island right there. And now look here at the 2-hour slim ribbon. It has turned negative right there. And the slim ribbon PO is negative. It's red right over here. So this is that first dominant right there, domino that is starting to tip over, and we will be looking to see whether or not that is what brings us the significant top in this market. Now, let's go back to the discussion of this daily chart and of the period of risk on the weekly chart that we were looking for a correction. That did not happen. All we got was a 3% decline in the period right in here where we thought would be steeper to as much as 6% to these weekly supports. I want to go over to the Russell chart right over here. And on for our members, and I sent you the notice on this, I have overlaid the Russell, a potential cycle in the Russell. Now you see where this bottom came here, and this bottom right over here lines up pretty similar to this bottom here. You can see these are the Russell troughs that I put in here. And that shows you this green cycle right there, which is out of phase with our original longer cycle. This decline right over here in the S&P 500 was over 6%. I might have gotten that wrong, and this timing might actually be where it is. And right now, yes, I'm second guessing myself, but this is how we learn how to project in a way to get what didn't work out to be more correct. So when I put this in the Russell, it said to me there's a potential that this was that correction and this is the rally, and that this is actually where the next correction is going to come out here. I don't know that yet. Look at how much the Russell's giving up. The Russell's down now on the week like 3.5%, 4%, and that's because interest rates are going up. Now, I don't think interest rates are going to go up anymore. So the Russell could get a bounce in here, and this is very well configured, very bullish with a positive momentum here on the Russell. So now I want to switch this over to SPY, where I have that same cycle overlaid right over here. And you can see the formation of that cycle here. And is it possible that the 6% decline that I was looking for happened over here along with that Russell decline? Well, if it did, I missed it. And sometimes this gets confusing, and sometimes around events, like when you're coming to election, things can happen in a very strange way. Either we're in the rising phase here with the Russell that actually began over here and it's already 10 weeks old, or it's coming here after a significant decline. I can't know that right now. And you can see the potential of this being the uptrend or this being the uptrend right over here. What we are looking at is the potential for the daily pattern that we're in right now, helping us a little bit, because this is where we saw this cycle bottoming, and this cycle right over here is the one that points out to early December that we've been talking about. This correction right over here could take you down and form in a way that's positive and then get you another rally. Or if it starts breaking supports in here as the momentum turns negative, then there's a potential that that actually turns into a pretty severe decline in here that gets you down somewhere around, well, 550 on the S&P 500 or worse. How will we really know that? Well, let's just look at these important retracement levels right over here. If the market, it's getting down to giving up 50% of it right there. So I'm just going to zoom in right there. If it gives up, under the 61.8, that is 580 on the S&P 500. That'll be our first warning that the market has had a peak. If it gets down under this level right over here, which is the level at the 78.6, that's 570, 470. That would be a very significant number and tell us the market actually might be in a lot of trouble. And then, of course, there's the cycle low support at 568.44 under there, and the market has peaked. Absolutely. So that's these are the important levels right there: 580, 570, 480, and then 568.44 on the downside. This island says that there is a lot of time for the market to fall and not likely be able to get much going on the upside anymore. The background news, I don't think, is going to be very good for the market, and I think it has seen the best of it right now, as I said in the beginning of the show. If you did not watch my opening monologue, I think it's very important for you to do that. So we're getting into the period now where the market will begin to tell us about the conditions. Again, the OBI still positive, the weekly chart still in positive momentum, the momentum on the daily still positive, but the first domino tips over right over here after coming out of the island and the intraday turning negative. That says to me that we have to watch these important numbers as this market moves sharply to the downside here today on Friday, November 15th. That is my analysis on the stock market. If you want to get that market condition monitor, please do become a level 3 or level 4 member. And don't forget about investing in our cycle analysis workshop so you can learn how to do the chart analysis that we do all the time. If you're new, well, you could start learning from this team of pros. by just looking around at our education and analysis for traders, investors, by going to askSlim.com. Our new front page, our new website in there has got a lot of information for you to see. And of course, you can write to Matt for anything that we have presented today that you may need information on.